Okay, this is the Order Flow Trading Course Lesson 20, Conclusion. My name is Michael Valtos. I'm the founder of orderflows.com. Before we get started, I'll read through a quick disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. CFTC Rules 4.41 state, hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, congratulations. You've made it to the end of the order flow trading course. The hardest part of trading is getting through the learning curve. Trading requires work, dedication, and exposure to the markets. By now, you should have learned how to read order flow footprint charts. Hopefully, you should have come to the realization that trading with order flows is not rocket science. It's actually rather simple. Just to expand on it a little bit, I say it's not rocket science. There is a little bit of science to it, though. You do need to learn and apply what you have learned to the markets. Comprehensive knowledge of trading with order flow does not come overnight. You're not going to become a great golfer by playing a few rounds. It might take you dozens of rounds before the complexities of the game sink in, and several hundred rounds as well as coaching to master the game of golf. Trading is similar in that respect. Only trading is not a game, and the score is kept in dollars and strokes. In dollars, not strokes. So, no matter what field of business you're in, whether it's, sports, or, you run a business, no matter what field it's in, you do have to keep trying to better yourself. And, success isn't going to come overnight. There's going to be failures. There's going to be education. You have to, I hate to say learn on the job, but, sometimes the only way to get experience is to start doing something. Back in the late 90s, I remember I used to sit around and see these websites, and I'd see people selling websites for thousands of dollars. And, I just wanted a little simple website, post my family pictures on. I didn't want to pay someone $1,000. I wanted to learn myself, just create my own little personal website. And, I sat down and said, I'm going to learn it. And same thing, when you think of trading, you have to want to do it. You have to want to learn. I think if you're going to go the route of just jumping from indicator to indicator each month, you're not learning how to trade. You're just learning how to spend money and, take an indicator, set it up, and, think it's going to make you money. It doesn't work that way. I mean, even if, in real life you buy a business, right, you still have to learn how to run the business. It's not like, you buy a McDonald's franchise. You have to go to McDonald's University. They have to train you on how to run the business. It's not like you run a regular restaurant and think, oh, now I could all of a sudden run a McDonald's. No, you have to learn how to do it. The people at McDonald's will train you, just as in trading. You have to surround yourself with traders that can teach you things. It's not easy to surround yourself with traders, but you have to take a step forward. You have to make the effort to want to learn. If you want to learn, people will share all sorts of things with you. They'll tell you how they trade. You're going to run into people that don't want to share things with you. They sort of think that, if I share, the way I trade with somebody else, they're going to take it and run with it and make $1 billion, and I'm going to be left with nothing. Well, the market's much bigger than that. And like I said, the fact that, elite traders out there are a very rare group. But you know what? I know a lot of elite traders. I know people that run billion-dollar hedge funds, and they're more than willing to share their views with you. It's not easy to get access to them. You have to know them to begin with, but like for me, back when I was at the bank, I would just call them up, say, hey, let's have lunch. We have lunch. They're very open with what they're thinking and what they want to do. In the market, it's not like it's, they got some state secrets they want to hold back. And, I hate to say self-fulfilling prophecy, but, if a guy has a certain view on, macro view on the world, it's to his benefit to share it with the world, so people will start thinking that, it's going to help his position. The people that want to hold everything close to the vest, that they're not necessarily going to grow as a person or as a trader. Now, trading is a much better business than any other business. Any business model that's out there, sometimes it's hard to scale. You hear that term, scaling up in trading, if you start trading with, 1 or 2 lots and making consistent profits, then, you jump up to 5 or 10 lots, and then your profits are going to start soaring. Well, it's not as easy as that, but you can do it. You get to a level of trading where, the position size will start affecting you. And each person is different. Some people can trade great, anywhere between 5 and 10 lots, but as soon as they start throwing around 25 lots, and they see the money that's involved, they have a very bad day. It's a lot of money. But, if they're trading 5 lots, no problem. There's not many businesses out there like that where you can start scaling up, but, you're going to scale up to a level that's comfortable for you. It's not like, everybody that's successful is making money hand over fist and they're constantly, upping their size. They get to an average size order, and they're happy with it. They're comfortable with it, and they can feel they can maneuver in and out of the market. Like I said, psychology plays a big part of trading that people don't necessarily understand. Another thing is you have to treat trading as a business and not a hobby. What that means is, you go to Las Vegas. There's people, they will go to Las Vegas and they'll earmark $5,000, $10,000 as expenses, for the gambling tables. Me, I can't stand losing money, whether it's in a casino or it's in the market. I feel uncomfortable going to Las Vegas and setting aside $5,000 that, if I lose it, it's gone. That's fine. That's entertainment value. Really, I'd rather go watch a movie, or see a show, it's going to cost me a lot less than sit at a table for 5 hours and drop a couple $1,000s and put myself through all that stress. I mean, it's just one of those things where, you have to treat, what you're doing as a business if you want to be successful. Be professional about it. So, when you trade, think of it as you're managing your own business and treat it as such. I mean, all those guys, all the local traders on the floor of the exchanges, they were basically their own business. If they don't make money, they don't eat. I know what it's like to be poor. I know what it's like to be dirt poor, living on ramen noodles. And this is back in the days when you could buy 2 Big Macs for $2. That to me, that was, at a certain time in my life, that was a fancy meal for me. You have to, approach trading, as a professional, and take it as such. Don't think that, I'll just blow up the account and, I'll go back to work and save some more money up. What you want to do is you want to get away from that mentality. You want to treat it as a business. If you run a business, you're not going to keep running a losing business for years and just keep throwing money at it. So just like anything in life, be professional about it is I guess the bottom line. So what's the next steps? First of all, I think you have to have a good broker with low commissions. By what do I mean, a good broker? A broker that knows who you are when you pick up the phone and call them. They don't have to know everything about you, but at least, when you say, hey, it's Mike, say, hey, Mike, what's up? Rather than just being, this is customer, 12456. I don't know. I mean, I'm a low maintenance customer. I don't expect much out of a broker. As long as the connectivity is there and the commissions are relatively low, I'm happy. I just don't want any waves once I'm starting to trade. I said I tell my brokers sometimes, because I do meet a lot of brokers, and I still have a lot of friends who are brokers. It's not that I don't want to talk to you, but the less I have to talk to you, that means you're doing a good job. Capital preservation should be your top priority. Don't take borderline trades. Use stops. If anyone said you have rules on trading, those would be my rules. Capital preservation, number 1. 2, don't take borderline trades. 3, use stops. That's, in any trade, I said you want to be sure, 1, you're not going to wipe out your account on one trade. 2, if a trade isn't setting up properly, then it's borderline. If something looks 75% there, it may work 75% of the time or 50% of the time. I'd rather take something that's, closer to 100% right as far as the setup, because I know over time it should work. Use stops. You don't know when the big order is going to come into the market and affect the market, where the market is going to move. You don't know if, a plane is going to crash somewhere or a bomb is going to go off. Make sure you're covered. Stop isn't a guarantee that you'll get out, but it's pretty darn close to a guarantee that you'll get out. Stop thinking about winning and losing. Try and take the emotional aspect out of trading whenever you can. What that means is don't think, I've got to start winning more, or, I got to stop my losing. Because winning, you're going to have winning trades, you're going to have losing trades. It sucks when the losing trades come in a row. It's nice to have, a couple winning trades, a losing trade, winning, win, lose, rather than have lose, and then start adding up winners, because it does affect your emotional aspect as much as you can. If you can take the emotional aspect out of trading, it will help you immensely. I used to have a setup that was, would give me, a decent amount of winners and a decent amount of losers. But I found by tweaking it a little bit, I can, sort of refine it and cut out a bunch of losers. At the same time, it would cut out a few more winners. But what I was finding wasn't making much difference to my bottom line, but my psychological bottom line, it made a huge difference, because what I did is I eliminated extra losers. The winners, they covered for the losers and made a little bit of money, but, honestly, it wasn't that much that, by basically refining the entry, it said it removed a bunch of trades, but, in the end, it was sort of a wash. But from the emotional side, the psychological side, it's a huge winner. Anybody that says, "Oh, I've got no emotion, I'm an Iceman," I think, I'll say they do exist. Those people are rare, but it's one thing when you're trading other people's money. It's one thing when you're trading your own money. When you're in a trade and it's going your way, and you're thinking, "Hey, this is great. I could finally take the wife and kids to Hawaii." And then it turns around on you, and then you give back everything you just made, and then some. For anybody to tell me that doesn't have an effect on them, it does have an effect. Lastly, keep track of your trades and why you enter them. If you can. I'm not saying necessarily make a journal of everything. Nowadays there's a lot of software. You can take screenshots of, what the setup looked like when you got into a trade. Maybe make a note on the screenshot. I don't have to say, write down, detailed notes where, okay, it was 9:18, we just come out of this high or something, and, like that. I just had a ham sandwich. Then, don't overanalyze it. Keep track of your trades and why you enter them. It doesn't have to be anything fancy, but, try and keep some sort of record besides a broker statement, something you could refer to, and then, you could look back on, and sort of decide, see where your trades have been losers, and, look for some sort of common denominator in it. And, and if you can pick something up, 95% of the time there's going to be, no valuable information, but you know what, if there's that 5% of valuable information in your records, something that can, change you from a borderline trader to a more consistent trader, then, the extra 45 seconds of work after each trade is worth it. Again, a few more few more of my, let's say my rules, but guidelines. Don't force yourself to trade. The market is there all week long, Monday till Friday, pretty much around the clock. It doesn't matter what country you're in, whatever time zone you're in. If you're in the U.S. but you can't sleep, it's 2 in the morning, you could, on your trading system, Europe is open. If you can't sleep, it's 11:30 at night, Asia's open. There's always a market open. Don't feel that, I'm working today, but I'm leaving early so I could trade the S&Ps and at the end of the session. Don't force yourself. The markets are there. They've been there for hundreds of years. They'll most likely be there, for at least the next 10 years, unless, something changes drastically in the world. But, they'll probably be there for another 100 years. Trade when the setup is there. If there's no setup, this goes back to the other rule from before, don't take borderline trades. Trade when the setup is there. If it's not there, what's the reason to trade? There's no reason to trade. Don't think that, if I just do, I'm one tick away from, I'm sitting on $1,475 profit today. It'd be nice if I get to 1,500. That's a nice psychological level. All I gotta do is make a tick. And in the end, you lose $300-400 trying to make that one stupid tick. When there's not a setup, it sounds easy in theory. I could make one tick. That'd be great. But sometimes making one tick is the hardest thing to do in the world. And then pay attention to order entry. If you have to take an extra 5 seconds, make sure your order is in correctly, take it. Don't start clicking away, thinking you gotta get in as fast as you can, because, sometimes when you do that, you start having errors. I remember, back in the 90s, I was having errors, this is on the old Globex terminals back in the 90s, they were provided by Reuters back then, and they're very clunky. Now they're clunky. Back then they were considered state of the art. But, these buy button, sell button. The sell button would hit the bid, the buy button would lift the offer. And, a window would pop up, say, okay, you're buying. Sometimes, you're in a rush, you don't care. I'm just trying to, you're hitting the button. You're not necessarily looking at the button you're pressing. You think you're hitting the right one, but you're pressing the wrong one. I used to have these stupid little errors, buy versus sell. And, I remember at one point the big boss, came in and asked the manager there, the trading manager, if I was colorblind. Why am I having these stupid little errors? But, if you do make an error in order entry, just get out immediately. Sometimes you like to try and finesse it and think, I can make a tick or two out of it. Don't. Sometimes I succumb to that. I don't really make that many errors nowadays, because now everything is pretty much automated. But there are times where, I sort of put something in, a bid and something, and I sort of forget about it. We come back down to it, and, I get filled, or I had a stop in, and, I forget to cancel it, and, later on the market rallies up through there and goes in my favor. Overall, they tend to work out. It's like sports. You play a game, you play football, and there's going to be calls that go against you. There's going to be calls that go in your favor. Overall, they should even out if you're prudent about it and you just get out. There's going to be some where you make a tick, some where you lose a tick. What you don't want to do is you don't want to turn, a small error into a big error. That's when you're going to really, kill yourself. So as you watch order flow charts on a regular basis, you become more comfortable with the charts, and you'll develop a calmer mind when trading, since you'll understand what is happening in the market, who is in control, and when there are shifts in supply and demand. Like I said, if you try and watch the markets on a regular basis. You don't necessarily have to sit there for 8 hours, from 8 a.m. until 3 p.m. Even if you're not doing it, you could have your computer running and just take a screenshot of it all day and sort of go through it, or just go through market replay on NinjaTrader. If you're using NinjaTrader, a lot of software now have a replay mode. But try and get used to it. Or over a weekend, spend 8 hours going over the week's market replay if you can. if you're going to do that, a nice bottle of rum or nice whiskey will, or Merlot will help the time go by quickly. No method of trading is guaranteed. There'll be winning trades and losing trades. Obviously, the objective is to have more good trades with larger profits than the losses on the bad trades. Remember, successful trading is not based on luck. There is a luck factor. You could decide to get, everything could set up perfectly. You have like the perfect setup. As soon as you get long, the market goes against you and never goes in your favor. That's the only luck I think that's in trading. But you don't think you have a lucky rabbit shoe or a lucky tie or whatever is going to help you. I'm superstitious. I'm Asian, and I'm superstitious to a certain degree, and but I know that it's just more. I think it's more of a mental state than anything that's going to have an effect on my trading. Successful trading, is going to be based on your knowledge and ability to execute what you know. It's you have a job to do it. Now do it. You know what you need to do to get it done. Do it. Traders that attribute their performance to internal factors such as effort and ability and to factors under the control enjoy more trading success. Like I said, it all comes down to you. Your ability to perform. And a lot of your success depends on you. Once you go on to the next part. Traders that attribute their performance to external factors such as luck and difficulty and to factors out of their control face trading failure in general. So, if you're going to be the person that's going to blame external circumstances as to why you lost on a trade, I did this trade, but then, so-and-so came in and started selling out, well, the reason you lost on the trade is because your analysis was wrong. It's not because, other people came in and decided to sell. There's going to be times where you have losing trades that are really beyond your control. Like I said, someone from the Fed decides to open their mouth and say something stupid, and the market just spikes against you. Or, like I said, some tragedy happens in the world, a bomb goes off, or, a tsunami. Those things happen. Unfortunately, that you can't control it. You just have to take your lumps and move on. That said, I know some guys that ran a hedge fund in Singapore, and they're very good. They're grinding out profits of, 2 to 3% a month, right? And then the financial crisis hit, and, it was due to external factors outside their control, the market volatility that they got wiped out. Those are external factors, but things that you can control on a day-to-day factor is, your own abilities. For me, I'm not the type of person that likes to just sort of eke out the bare minimum on a trade. That is going to take a little bit of a factor to move me out, but, your success depends on you. It doesn't depend on what other people are doing in the market. So using order flow analysis does not guarantee that you'll become a successful trader, but the understanding of the market that you gain from it gives you a much greater odds of success. You have a great start to trading with order flow. Now it's up to you to apply what you have learned to analyze the market objectively and make intelligent trading decisions. So, what it comes down to is, I've shown you a lot in this course. A lot of things that I've learned over the years, a lot of things I've used in my trading, a lot of things that people have taught me. It's all there for you. And, it's up to you to take it and run with it. I can't teach you, I could teach you how to ride a bike, but I can't ride the bike for you. At the end of the day, you have to apply what you've learned. It's one of those things where, what's the point of going through a course and not applying what you've learned? If you're a doctor, right, you go to medical school and you get out, you practice what you learned. You don't all of a sudden start winging it, right? You're going to operate on, do brain surgery. you're going to refer back to the courses you've had on brain surgery. You're not all of a sudden going to, just wing it. Okay, so hopefully by now you'll understand. I mean, you can lead a horse to water, but you can't make it drink. I mean, I hate to use that phrase, but being a successful trader, you have to approach it professionally and to treat it as a business, treat it as the way you want to make a living. If you're just going to sort of take it and if I make money, that's great. If I lose money, let's go look for something else. No, you can make a lot of money. You can make a living doing it. People do make a living trading. People make billions of dollars literally in trading. Not everyone is going to, but you can make a good living. There's a lot of people that make good livings trading. So what follows next are actual screenshots from trades that I've taken over the last few weeks with short explanation of why I took these trades. You've seen a lot of examples, but you haven't seen any results. These are trades that I've taken. Some were in my trading room, some were not. But I'll just go through these real quick. I think there's about a dozen or so. This was just within the last couple of weeks. What do we have here? This is a bond chart. We're going to come up to this high here, and it's one of those things I talk about. You get up to a high, but you got a big, strong negative delta. That's not what you want to see. And what happens next? We're just sort of tailing off here. Then we bounce back up here, and I notice, I'm seeing this area, this single print here as a bit of price rejection. Why aren't we going any higher? We've sort of been in this zone, this trading range, for the most part. But, what really stood out to me was this high with the negative delta, strong negative delta. You do have a ratio up here. I wasn't necessarily convinced, because we just had this one bar with a strong positive delta, then you have the strong bar with a negative delta right after it. I was sort of waiting to see, and I wanted to see some sort of confirmation, and I got a couple of things. I've got this bar here with, the single print. I got a buying imbalance here just underneath the single print. But then, afterwards you got the selling came in. Really the supply and demand shifted internally within this bar as opposed to sort of working your way up and shifting. It was a little bit negative to begin with, but, I saw people being aggressive here, trying to take it higher, and they couldn't, and then selling came in. I got short here in the next bar at 13, and, I just took it down gradually to 07. Maybe later it fell over a bit more, but, it was a nice little trade there. Okay, this is in the bonds. What I'm looking at here is, this is a very quick trade. And this was, done around 6 in the morning. Usually if I'm trading before the main session opens, I'm just really looking to get in and out as quickly as possible with, with a few ticks. I'm not necessarily going to start riding it into the morning session, especially if there's any numbers coming out at 7:30. Usually if I'm getting in, in that time period, I'm just looking for a quick hit. And, so what happens is, we're sort of going sideways, pop up here, got a single print, okay. And then a strong negative delta, a single print. The next bar, you got a big heavy volume right here, 1198, as the market tried to go back up. But someone is in here offering, a lot, they got a lot of supply to sell. It's kicking off a nice ratio here, 0.03. So I was just looking for a quick trade. I got short at 17, out at 14. Okay, this is E-mini. This is okay. Actually, this was in one of the lessons, and what it was I remember this. The market was going sideways, and you have this big ratio right here, 1327. It's getting a ratio of 0.29. Then you got the buying imbalance right after it, and I remember I was sort of going back and forth about getting along in here. For some reason when I look back, and I thought I got long around 90.5 or so. And actually I got long at 90.75. And what it was on the back of this. I wanted to see us get through this 1327. Getting long in here and coming up into this 1327 level is, I know there's going to be some sort of resistance. What I saw develop here was I saw the aggressive buyers coming in, and I thought if we get past this level, I could get a nice pop up, and I got a nice quick 2 points. That took all of a minute, or a minute and a half. You see 9:01 to 9:02. I probably could have squeezed a little bit more out of it, on the back of this ratio here and what was forming here. But you know what? I'm happy to get out where I got out. Okay, what do I got here? This is a bond chart. This is one. He said it happened extremely fast, and it happened all within the same bar. Usually it doesn't happen that fast in the same bar, but we're working our way up. We hit the high. You got a divergence. You have a ratio indicating a small print. I got short on a pullback up to the point of control. I like to get short at point of controls if I'm thinking the market's going to sell off. I'm going to use the point of control as my support or resistance level. So in this case, I threw an offer up there at this level at 29, and I threw in a bid at 24, just real quick, quick 5 points, and lo and behold, within that bar, a few minutes after it rallying to fill me up there, it came right off and filled me on my take profit. Okay, this is an ES chart. This was a nice little trade a couple of weeks ago, and this is an interesting one. But what happened is this green line is the high of the day. So you can see we made a new high, We got a divergence here, But right when we made this high here, you did it on a buying imbalance. Like I said, I'd much rather look to get short near a high than buy near a high. So here, you're thinking, oh, you got a buying imbalance, you should buy. The market's going to go higher. Well, yeah, it did go higher. It did go higher by 2 ticks, but then it turned around. So, I was watching this. I remember, you had a positive delta in this bar. Here, you hit the high and you got a strong negative delta, minus 1,300. Then the bar following it, minus 2,000. And then the bar following it, minus 3,000. This is telling me there wasn't any ratios here. You did have the divergence. Here you have the single print. I would have loved to see, a single print up in here or a ratio up here. I would have gotten in a lot earlier. Nevertheless, when I see this happening here, it's screaming at me to get short. And, I got short at 04, and I took it down to 99. We sort of went sideways here. It came down, and I saw that we're sort of bouncing around. I just figured, 5 points in the 10 range chart for me is normal. Usually, people always ask, why I use 5 points on a 10 range chart. I find that, it's a level that where I get in, the market tends to move 5 or 6 points, 7 points sometimes, but, 5 points is sort of my average, profit on a 10 range chart. Okay, what is this? This is the minis. This one, this was an interesting one. We were working our way up, and, we get up to our high here. It's got a negative delta. The market goes sideways. We poke up through the high again, and you got a strong negative delta, at our high, followed by a strong negative delta. This one, I was looking for a circle back up to this high. I say circle back, sort of come off a little bit, then work our way back up before selling off. And, I got in just above this point of control at, 4 3/4. I had an offer and up here at 5. My stop was just up here, above this high, 6, 6.5. We came back up to 6 and then sold off. Really what I was looking for. Said, if these sellers that you see here every time we hit the highs, if we're going to come back up to this high level and these sellers are going to reappear, I want to be short. I don't necessarily want to be short down in here. I'm looking for the market to work its way back up and then sell off. I look for the sellers to reappear, because every time you hit the high, the sellers came in. You got this high here, you got negative delta. You have this high here, negative delta. You made your run back up towards the high. You got within a tick of it. The delta is small. It's 190. But then in the next bar, the sellers really showed up. I got short at 5, got out at 97. Normally I use 5 points. Initially I was looking at 00 as my take profit, but then I see the imbalances coming in. This one here, which tells me to back off. I could back off my offer, back off my bid. From 1900 to 99, 98. Eventually I got out here at 7.5. Okay, this is a E-mini chart. This is a small trade. It wasn't the greatest trade. I got a tick out of it, but it's one of those trades where, the market went up and I was looking for a reason to get short somewhere up near the high. I got short at 1912.5, and the market just proceeded to go sideways. I got short here at 12.5. I got a little aggressive. I sold right on the low where you have you just happen to have the big stopping volume. Market rallied back up. I wasn't too concerned. I said we got up within a tick. We just got on the other side of the single print. The market then proceeded to start to sell off a bit. It just really wasn't going anywhere. I later covered it here at 19.25. It's one of those things where it's just see the deltas going sideways, positive, small deltas. It's a sign of absorption, and the market's just not going anywhere. So, I said it's time to get out and just, reassess what's going on. I like the market to move a bit quicker, rather than to go sideways over the next 20 minutes. I said I got a quarter, I got one tick out of it, and, but so you got to trade what the market gives you. Sometimes, the markets just go sideways, and, that's life. Just try and get out with a small profit when you can. There'll be more time to trade later. So this was in the bonds. It's one of those things. We hit the high here. We got a divergence. We got a strong negative delta. I'm always worried, concerned when you get up near a high, the deltas sort of get small and you get strong negative deltas. The next bar, you have the small print. Again, you got a strong negative delta. I got short at 25, and I got it. I took it down here to 18. These setups, these occur every day. Sometimes they're a little bit easier to see. Sometimes they're not. In the previous chart, I was really looking for a move like that. It didn't happen. Sometimes they happen a bit easier. Sometimes not. The difference in this S&P is, I ran into this stopping volume here, where it was just, then it just sort of went back and forth. I could see on the deltas, the market's absorbing the buying and selling. It wasn't great volume. It's 4 a.m. Chicago time, but, the market's going sideways and getting small deltas. It's just telling me the market's evenly, distributing the trade. Here in the bonds, this was at 11 in the morning. Time is different, and, markets tend to move, faster when there's more activity in the markets. This is an E-mini trade. I got long, basically off of this buying imbalance. I said normally I'm not big on buying, going into a high. So, this is a case where, we had sort of been in this zone here. I got aggressive because, I did see, every time we'd try to go higher, we'd get some buying coming in, but there wasn't much selling, but really what I was waiting for was the market to show its strength, and it showed its strength. I got in at 75. I said, this is one of those rare cases where I got long, going into a high, but, I felt very confident, when I see the deltas fairly strong. Honestly, I didn't expect to get as much of a big move. I did back off a bit on it. Really, I was really looking for 84, if I remember right. But, I got up to 83. I ended up getting out here at 81, just because, I saw there was a lot of volume starting to trade up here. And when I see a lot of volume starting to trade like that, the market can tend to go sideways. When I'm in a position and I want the move to happen, I want it to happen fast. Not necessarily a lot of volume. When you reach a level with heavier volume, then I start to think, start thinking of getting out, because, that's an area where there's going to be a lot of supply, especially if I see a lot of volume on the offer. Here you see 2,000, 2,000, 3,000, 2,000. So, earlier on the move up, you're seeing, 600, 700. That's why I backed up to 81 and started thinking about 84. But I think, 81 is probably a very, very good price to get out at. Okay, in this next one, this is a bond again, and, what you have happening here, you have 3 in a row. We sort of have our high, swing high right here. Single print, single print, single print. You get the green bar. You get looking for a little bit of a pullback. I got short here at 06. I'm using these levels up here as my resistance, these single prints. We came back up I do sort of expect to take out this first single print here, this one, and I'm going to look for this next one to hold. Worst case scenario, my stop is up here at at this single print. I'm short at 0.5, and then I took it down to 31. I could have got out a little bit later, but I was really looking for this move to happen. Not as much of a pullback that we got. But that's six ticks. Realistically, I could have been a little bit more patient when I see the delta, sort of getting a little bit stronger here. 210, 289, 170. 84, yeah, it sort of slowed down a bit as you're going sideways, but then, it reappears in here. It's one of those things, you got to make these decisions in your trading. Should you back off or should you stay still? Lastly, this is in the bonds. And, you got a couple of things going on here. We're coming off of this, sort of this area up here, working our way down, sort of come back up. Like I said, I'm looking for it to circle back up to this single print here. It came back up to the point of control. You got a single print. You got a stacked imbalance. Okay, so, like I said, we're trying to come off here. You got these 3 single prints. You got the green candle. I'm looking for a pullback up here into this area. And, it appears, you don't necessarily have to go in and sell at the market down here. You look for a pullback. If you're going to get a move down, sometimes, try and understand where pullbacks will happen. In this case, it did come off this low, and it pulled back up into this area between these 2 point of controls. I said I got long just on the other, I got short rather, just on the other side of this point of control. And, I was able to get 10 ticks out of it. I probably could have got more, but, 10 ticks it happened, within 3 or 4 minutes, which is very good. How often can you get 10 ticks in the bonds in 3 minutes? But I've sort of taken a lot of things into account. I got the selling imbalance, the market's moving lower, and I got small print, small single print, single print, single print. I see this green candle. Okay, I know that I'm probably gonna get a little bit of a pullback in here, and choose my area in between these 2 points of control to get short. And I got short at 27. If it is 28, 29, it rallied back up to before selling off. So, the market gives you these chances, every day to get in and get out of positions. Sometimes it can just give you a second chance to get in. Sometimes it doesn't. Sometimes, there's going to be times where these trades don't work out and the market just goes straight down. But, you got to pick your spots. If the trade's going to let you get in on a pullback, then get in on a pullback. So it doesn't always work that way, but, when it does, it works. Those are the trades you want to take. You don't want to force anything. So, to wrap up, your future depends on many things, but mostly on you. It's up to you to make it work, for you to do the trading, for you to watch the market and to understand what you're looking at. So, just real quickly, a lot of people that watch this already have my software. If you don't, I have a special offer for you. I'm not trying to make this an advertisement, but, this course is based around using my software, and a lot of the things that you see in here are based on my software. It would behoove you to use the Order Flows Trader. You don't need it. If you have already your own expensive version of Order Flow software, by all means, go with it. But, if you want to have the same screen that I look at and look for the same setups that I look at, go to orderflows.com/course deal and you'll see the offer. Thank you. And that's the end of the course. Good trading.